Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 183. Now, today, what I'd like to cover is some of the recent rises that's happening in the marketplace, some of the causes you may be wondering. So we'll take a look a little bit about the oil price surge. Also, we'll look at CPI that's set to come out at 8:30 in the morning. Right now, we're right around 8 o'clock in the morning here Eastern time. So I wanted to get this video out a little bit sooner, and I have a few other things to take care of here later today. But I'll show you some insights to some of the news headlines, and then we'll also take a quick look at a few charts. Of course, if you're interested to get some more detailed analysis, then take a look at the tradersfly.com website and some of the memberships there. With that being said, let's take a look at some of these things. One of the first things I want to look at is CPI, and that's set to come out right around 8:30 Eastern time. Now, this may give some fuel, as they say, to the Fed who want faster rate hikes, because if CPI continues to climb, right, they're always talking about 2% inflation target, right? And we've talked about inflation the previous week. We looked at Amazon rising about 20%, for example, their $99 membership to $119 or $120. It's about a 20% rise right there. Chipotle rising rates, McDonald's rising rates, all their prices are being risen, right? So they rise all their prices. And as those prices get higher and higher, you have to pay more. Now, here, when you look at the Fed, they're always talking about 2%, 2%, 2%, 2%. Now, here, if we go above 2% a little bit, and we go with the consumer price index a little bit above 2%, what happens is now the Fed is saying, well, it's okay if it goes a little bit above 2% because we've had some things that were under 2%. So you can see how this cause and effect, this wishy-washy stance, really starts to play out in the sense of, well, we can justify it any way we want, right? As things go a little bit against them, they'll adjust it, the wording, the phrasing. This is what happens with the government administrations. This is what typically happens, is they'll readjust the wording and the phrases. In the past, they've always been looking at 2%. 2%'s right there where they want to be. If it's a little high, they'll try to slow it down by raising interest rates, and so on. And if it's a little bit below, they'll speed it up by reducing interest rates. But the thing is now the way they justify it is saying, hey, well, if we go above 2%, 2.5%, we're not against that. You know, they haven't said specifically what's too high. But they said, well, if it goes a little above it, that's okay because we've been a little under it in the past too. So in an average, as we look at things, again, we don't know if that's a 10-year average, 5-year average, 20-year average, that will still be okay. So anyways, it's just a way to, justify words and phrases. It's kind of like saying, hey, well, I have these two colors of orange. Well, which one looks more orange to you, right? So is it this one or this one? Or if you look at the tones of shades of red or orange, or in that bracket, RGB, which one's more red, more orange? Well, this one's more red, this one's more orange, but again, and then you get into, again, these kinds of colors, and you start comparing, well, which one's more orange? Now you get even more kind of convoluted into the point of 2%. What does 2% really mean? Are they really firm on that 2%? And this is kind of the issue that happens with all these government things. Anyways, some of the recent run-up that we've had here in the market, we had S&P 500 here bouncing from this 2,600 level was really the key, and we had some serious bounces right at this price point and going, I think, a little too quick, too fast, at least for the short term. Maybe it's fine for the longer term. But the oil prices really, and if you haven't noticed at the pump, your price you're paying is probably higher. Now, you might be saying, hey, it's great, I'm making more money in the market, but you're paying more also at the pump. So this is what happens. Some things are positive, other things are negative, right? So you're making more in the marketplace, maybe through investments, especially if you're bullish, longer term investor, but you're paying more at the pump. And this is also what contributes inflation. So inflation, as it continues to accelerate, the market's okay with it. So prices in the stock market also continue to go higher because you're inflating things, but you're going to be paying more, 20% more for Amazon, 15, 20% more for a McDonald's, 10, 15% more for a Chipotle, anywhere, everywhere else, same thing, because sugar prices go up, meat prices go up, and that's typically what happens. And the same thing here as we get surging oil prices, the same thing. the market rallied on this kind of news and context. Now, the one thing you have to keep in mind is that you have to watch this 10-year yield at 3%, because as this starts hitting 3% and goes above it, some people get a little bit more scared as far as, hey, well, maybe I shouldn't invest in the stock market as much, or maybe they'll put a little more money into the bond yields instead of the stocks. And this is really one of the things to kind of watch. And it's one of the things that freak people out. It was either here or here. It was one of these bars back here. I'd have to look it up which one it was. But somewhere in the last couple of weeks, we had a freak out over the 3% bond. And now they seem to be kind of okay with it. But with oil rising, this could also trigger that panic back. So be very careful there at this level. We are one day kind of into the big bounce and break, which I'll show you here in a second. But also Gary Cohn here went and chatted a little bit. He talked about some of the jitters here in the marketplace, again talking about commodity price inflation, also inflation. So basically, overall, to simplify things, you're paying more for things in the real world. Now, in the stock market, if it continues going higher and it continues to rise, that's also inflation. But overall, everywhere else, you're paying more, whether that's for computer parts, whether that's for sugar prices, meat prices. You're looking for food, you're looking for commodities, oil, gas, that kind of thing. You're basically paying more. And it's not just 2%. You look at the Amazon, you look at McDonald's, Chipotle, the examples we did in the previous lesson. It's much more than that. It's probably, given it on average, I would say a good 5 to 8% if you start averaging things out. Some things didn't inflate as much, but other things inflated quite a bit. So I'd say at least 5 to 7 to 8% is where you're at. Anyway, with that being said, let's take a look at the S&P 500. This was the key line I've been watching. I've been talking about this for our members for quite a bit. These 3 points have made it. These are the resistance levels, but now we're breaking out beyond that. Now we've only had one day on that breakout, but we are breaking out past that level, which could trigger a longer term rally, or a little bit, longer than, let's just say, a couple of days. Now, this 2600, 2775 is your key level of support. You're also looking at kind of this moving average on the 200 days. So this is all kind of the key. And as you watch this, these are your key support levels. As far as resistance goes, well, resistance is right around 2700, which you're watching, and also some of these peaks just right above that level as well. 2800, 795. So some of these key levels are some potential headwinds. Of course, way up here at these highs, also some headwinds. I don't see we're gonna rocket ship right back up there to the price level of 2875 or anything like that very quick. But you could get a euphoria rally to, let's say, 2800, and then get kind of a nasty drop back down to something like back to 2750 or something like that. So that could happen, but it won't happen in a day. So just be aware that we are breaking out of this kind of trend line, but you also want to be a little more cautious to the fact that, well, if we get a very accelerated ramp up, even like this in the past in February, you could get a pretty nasty drop down like you did kind of in early March. So again, you get a ramp up and you could get another drop. So the faster it moves up, the more trouble it could get into. But this is building a base kind of here. So this is kind of stabilizing at 2600. And this is kind of our triangle pattern. So just be aware of it and watch it. As far as the big companies, here you have Apple that continues to shoot with Warren Buffett pumping that stock up. Obviously, he said, hey, we got a lot of shares in there. We'd love to buy more. And, that's just basic general pumping techniques that people do. And of course, why wouldn't he? He's got a large investment in it. He doesn't boast about it like some other people do, or, let's just say people on Twitter will pump some stocks or penny stock pump and dumps. But in the same world, he doesn't want that stock to crash, right? So, of course, he's investing in it because he believes in it, but it is still a pump. So here, because of that pump, you can see we're a little too far too stretched. In my opinion, that angle is a little too strong. So when you look at this, a pullback even for a couple days is warranted. Could it still continue to ramp up higher for a few days and then stall out, kind of like, you shoot off a rocket ship and then it stalls out as it runs out of fuel. You know, you got that delay before it starts falling down. So the same thing could happen here. You might get a little higher, get that delay, and then you'll get a little rollover. Could it be at 180? Yeah, it could be. It could be at 185 where it starts to kind of stall out and then bounce from there, you know, but a little too far too fast. That's my whole point, is just it's very accelerated, a lot of emotional buying in that stock. Amazon also coming right into that 1610 level. We have resistance right up there. It had earnings there in the past, pulled back a little bit, and now reattempting that. If you really want to see higher prices on this, you need to see a real clean break, probably good 40 point, 50 point break with nice big volume. I'd say at least 5 to 7 million on the day. We're not getting that yet. And also, of course, watch to see if this is too far accelerated here on this trend line. You know, it's okay, it's not bad, but if we get a move a little too far too quick, this could create a little bit of trouble. Let's take a look here also at CMG. We had a major pop here with the earnings, of course. Here we are going a little bit sideways, digesting that movement. You can see, so it's just waiting for further price action confirmation. Keep in mind, you do have a little bit of a gap here. This is a little bit of trouble. But other than that, you know, stock is still has been in that downward trend with a few pops. So now is this the part where we're kind of basing and rolling to the part where we're moving a little higher? Could be the step up, because 300 was kind of that key level. Really 275, 250, 255. Right there was the swing low in 2012 is really what you're watching, and we did test that. So now you might get a little bit of a, you know, nice cushiony bounce. And if you got it around 275, 250, you could see we did pretty good bounce to about 425 right now. One more I want to take a look at, actually two more we'll do. Facebook, again, also a little accelerated in my opinion, kind of like Apple, but it is one that people love to buy. And you can see we had another little breakout here because of the gap. Could get into this level, which would be resistance, which will put you right around 185 at a little bit of a resistance level. And let's look at Google and Netflix here. So Google, $1,000 level, also a key support level that you're watching. Again, you're getting into 1,100, could be a level of resistance. So be careful there. And if you get into 1,180, that could also be potential problem level there as well. Taking a look at Netflix here, coming in right there at 330. Also a little bit of trouble that could happen right there. And again, if you want to see this breakout, you want to see nice big volume, big wide price spread, big breakout, probably a good, I'd say 7 to 10 million shares on this one at least for the day on the breakout, and a nice big, you know, $8, $10 bar. That'll really move that stock. But again, you got to wonder, is it a little too stretched, and are we going to have some trouble here overhead? So that's the thing, is you have a few of these stocks lining up right there at key levels, like Netflix, 330. You look at Amazon, you know, 1610. You look at Apple, a little stretched. Facebook a bit stretched, and it's tough to go higher when tech's a bit, you know, stretched at those points. So I just want to share with you these kinds of things to be a little more careful and be aware of where we're at. Overall, we are breaking this trend line right there, this descending trend line, which traders will watch. But you do want to keep an eye on some of these resistance levels. Of course, 2,700, but also this gap level right there. So it's basically this range right here that you're watching could be a little bit of trouble. It's not just one price. You're looking at a little bit of a range. You're looking at this range right here, right below that 2,800. So that's kind of an issue. This price point might have a little bit of trouble because you have a little gap there and a swing point right here. That'll put us right around 2,755. So those are a few levels. So 2,800, 2,755, 2,700, 2,720. Those are a few key resistance levels. If we start clearing some of these, you know, the market will get more euphoric and probably pick up more steam. But again, the more you stretch, keep in mind, the more problems you might get on the pullback. So here, as I look at, let's say, IWM, you can see on a Bollinger on the daily, we are a little bit stretched, right? If you look at the weekly, we're coming into some resistance. If you look at the Qs, also, you know, you're breaking this out right here, and you're getting into upper ranges on the Bollinger Band. So just keep an eye on these things because they usually all work kind of together. Anyways, thank you so much for joining me today. I hope you enjoyed the video. Don't forget to subscribe to the newsletter list or join on the Traders Fly website if you want to see more detailed recaps. And of course, if you want to just watch on YouTube, then click this circle on my face right here, and that way you get notified on YouTube as I release new videos. Thanks again, and in the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you in the next video.